just business news, we're news for business people.
Hello and welcome to Bloomberg Quint Live and good morning. You're watching Daybreak and I'm Alex Matthew. First, let's look at the headlines. It's a cautious start to the day for Asian markets as investors wait for the final vote in the Senate on the US tax bill. And speaking about that bill, it's going to require another vote in Senate. That'll take place later today because it didn't comply with some of the chamber's budget rules. Tata Steel is looking to raise 12,800 crore rupees through a rights offer to expand its operations in India. And the country's largest mortgage lender, HDFC, is looking to raise up to 13,000 crore, primarily to subscribe to HDFC Bank's preferential issue. More on that later. First, let's start with the international markets. US stocks have snapped a two-day winning streak and slipped from records as Apple dragged tech stocks lower. Bloomberg's Abigail Doolittle wraps up all that's happened in the US market.
The major averages fell in Tuesday's Wall Street session. The Dow shed 37 points, down the least of the Dow, S&P 500, the Nasdaq. The S&P 500 down 0.3%, and the tech-heavy Nasdaq down the most at 0.4%. Now, all of this came as House Republicans did pass tax code. That's the first hurdle in presenting a unified bill to President Trump before the holiday break. Seemed that we had a little bit of sell the news, but well before that, we actually had another pressure on stocks. Yields, rising bond yields. The 10-year yield up about 5 basis points. This really influenced sector composition. Lots of the high dividend yielding stocks or rate sensitive stocks were down, including real estate, utilities, and telecom. The financials, however, should benefit from rising rates, but that sector was down. So you can tell that it was really a broad-based pullback. Tech, another down sector. Now, that brings us to one of the big drags in the markets overall today. Apple shares were down more than 1% on a very rare downgrade to neutral from buy over at Nomura, with the analysts there saying that the iPhone 10 supercycle is more than priced in, with the stock up more than 50% year to date. Now, some of the other big tech names also lower. The FANG stocks, Facebook, Apple, Amazon, Netflix, and Alphabet. So a general risk-off tone for tech and the markets. Oil, however, higher when we go cross asset class, and that's a growth asset, and haven assets, interestingly, lower. So the fact that we had stocks trading lower didn't really create a true risk-off picture, considering, again, haven assets also lower on the day. Bit of a mixed picture overall for the financial markets in the U.S. on Tuesday, even though, again, stocks did fall a bit. In New York, Abigail Doolittle, Bloomberg News.
Well, Donald Trump is just a step away from registering the first legislative victory for himself since he took over at the Oval Office. The House of Republicans and the Senate passed the U.S. tax bill late last night, but the bill will have to be voted on again in the Senate because it didn't comply with some of the Senate's budget rules. Here's Laura Davison of Bloomberg Tax with a wrap of the minor hurdles that the legislation might face from here on out.
What happened is basically the Senate parliamentarian, that's the rule keeper in the Senate, said two of the provisions violated what's known as the Byrd Rule. And this is a requirement that everything that moves through budget reconciliation, the process that the tax reform bill is moving through, must relate directly to federal revenue or spending. And there's two things that they found, or that Democrats really pointed out and said, look, we don't think these comply. One is a provision related to tax savings accounts for education, the 529 account. The bill would expand it to allow to homeschooling. That's one of the things that's going to get kicked out of the bill. Another one is basically an exemption for an excise tax for college endowments with schools with less than 500 tuition-paying students. That's another issue. So basically what will happen from here, they'll pull those from the bill. Senate will vote tonight, and then the House will vote tomorrow. There's no indication that this should cause the bill to fail, but it's just sort of delaying it another 12 hours.
Let's move to the Asian markets now. And the Asian markets have opened mixed, like we told you, and cautious, with the Japanese Nikkei and the Australian benchmark both in the red. Since then, though, the Nikkei has moved into the green, if only barely. Let's move to the Indian markets now, and Darshan Mehta is here to set us up for the day's trade and all that's happened in the futures and options space as well. Darshan, what are you looking at today?
Well, it seems like the day will be rather muted because the SGX Nifty is indicating a downtick of 23 points currently. So that's what we're seeing. So it's a 23-point downtick that we're seeing on the SGX Nifty. But still, today we'll still try. The market will be trying to go back to the record highs that we had. As far as ADRs are concerned, most of them ended positive. Tata Motors was up 3%, ICICI was up almost 1.5%, Wipro was up, Vedanta was up. So most of the ADRs were up. Dr. Reddy's was the only one which was trading with losses, and Infosys ended rather flat in trade. As far as crude is concerned, it has gained almost 0.5% overnight. Even in morning trade, it is trading much stronger, given the fact that the WTI has moved above the $57.50 barrel per mark. But the US Qs that are coming out are actually positive for the prices of crude, and that is why it is managing to stay stable at this point of time. As far as commodities are concerned, it was a mixed closing for base metals on the LME, because if you're looking at what happened, aluminium was up almost 1.2%, copper was up 0.5%, zinc was flat in trade. The other base metals, nickel was down, lead was down, tin was absolutely flat. So mixed sort of closing that we have seen. But as far as China is concerned, the start is absolutely strong. Just look at some of the metals that have opened up. So rubber is up close to 1%, aluminium up 0.7%, copper is trading up, aluminium is trading up. So most of the base metals are trading, and the other commodities are trading strong in China. Gold is trading flat in morning trade. There's nothing much. Even yesterday it traded absolutely flat. Flows, FIs were net sellers in the market yesterday. They sold in almost 408 crores. But look at the DI buy number that happened. They were significant. They were aggressive buyers in trade. They bought in almost 357 crores in a market where FIs were sellers. So overall, FIs have sold in 2,600 crores in the cash market. But aggressive buying by DIs, they must have bought in excess of 6,000 crores in the cash market. So that's the scene that's happening as far as the DIs are concerned. The Nifty has closed with gains for the fourth day. It has closed at record. It closes in to come in near the record high. On a closing basis, yes, it closed at record high. The mid caps and small caps did extremely well. They outperformed the benchmark indices, and the WIX cracked significantly. If you're looking at the WIX, it was down almost 6 to 7%. It was down almost 7%. Now let's take a look at the trade setup as far as the Nifty is concerned. What contributed, what didn't. So if we can have that, the Nifty was up almost 75 points. The big mover was Maruti Suzuki, up 5 points. It overtook HUL as far as being the fifth largest company in India currently. ICICI Bank, Tata Motors and Hero. So auto as a pack did well. On the losing end, it was basically IT and some of the private banks and NBFCs. So Infosys, HCL Tech, HDFC and IndusInd contributed negatively. But majority of the move came in because of the auto sector that we saw up 75 points yesterday.
Well, thanks, Darshan, for that. But there's also a lot that we can talk about in the F&O space. Yeah,
so in the F&O space, if you're looking at what happened with the Nifty Futures, there was fresh buying that was seen. The open interest build-up was almost 0.4% on the Nifty, so fresh buying was seen. If you're looking at the Bank Nifty itself, that saw aggressive buying. That the Bank Nifty is actually trading at a discount, but fresh buying was seen. Open interest build-up of almost 1.3%. The PCR, the WIX continued its fall from a high of almost 15. It's come down to levels of now 12. Given the fact that the market is trading much aggressively. Look at the PCR. The PCR has moved from 1.30 to 1.44, indicating aggressive put writing. Now, if we have the chart and we can show you what happened in trade yesterday. Now this is the total open interest build-up that is there. 10,000 is the biggest support, but look at the red numbers here. From till even at 10,400, there is aggressive, support that is coming in. 10,500, here is where the resistance will come in. So if 10,500 is taken today, you will see a lot of unwinding as far as calls are concerned. So it's an aggressive trade setup that we are seeing at this point of time, but it will be between the 10,400 and 500. Now look at what happened yesterday. Since the market moved up, yesterday the 10,400 put saw the maximum open interest. That saw a build-up of almost 119 lakh shares in open interest. So there was aggressive buying that was happening. So that is something that you need to watch out for. And call writers shed position. So it seems like a bullish setup at this point of time. Now, some of the stocks that you have to watch out for. First of all, enters the F&O ban. Jet Airways, after being out of the ban and gaining significantly, enters the F&O ban. So Jet is in the F&O ban. Jain Irrigation was one of the biggest gainers yesterday, but that comes out of the FNO band. It was up almost 11% on high open interest build-up and volume. Stock-specific, Page Industries, again, high open interest build-up, 36% open interest build-up on the long side. Aggressive buying is seen on the counter. The other counters that you have to watch, Page Industries is one of the counters that you have to watch out for. That's basically, Alex, the trade setup that we're looking at.
Well, that's what you have to look for with regard to the futures and options space. But let's move on to the rupee and bond market. Saloni Dhanuka joins us with all the details on those two markets. Morning, Saloni.
Good morning, Alex. So the rupee yesterday closed at a fresh 3-month high against the dollar after local equity markets strengthened for the 4th consecutive session. Now the home currency opened a tad higher at 64.22 levels. However, later in the day, it breached the crucial 64 mark to hit an intraday high of 64.94 levels against the dollar before concluding 0.3% higher at 64.24 levels against the dollar. Now, according to a Bloomberg report, DCB Bank expects rupee to rise further on potential inflows that are expected in January, and hence they expect rupee to trade in the range of 63.80 to 64.50 in Jan to March quarter. Now on the global front, dollar trade steady against other major currencies. It is trading flat to positive in the range of 93.50 levels to 93.70 levels. Now after House of Representatives approved the biggest US tax reform in 30 years yesterday, however, Republicans are likely to make another vote today because of some procedural issues. So it is something that will remain a key watch for currency markets. Elsewhere, Japanese yen trades close to 113 mark ahead of the Bank of Japan 2-day policy meeting, which is starting today. Now it will remain a key watch for clues that if Bank of Japan will join hands with the Fed or European Central Bank in winding back stimulus. Now coming back home, dollar rupee is trading flat to positive in the range of 64.05 levels in the non-deliverable forward market. Now moving on to bond market, the 10-year benchmark yield ended steady at 7.18%, while global funds reduced their rupee debt holdings yesterday. They reduced their debt portfolio by close to 420 crore according to NSDL data, Alex.
Thanks, Saloni. Let's move now to the commodities space, and Jayesh Khilani joins with all the details there. Base metals looking good, Jayesh.
Morning, Alex. That's right. In fact, all of the base metals closed stronger. The index itself closed 5 days positive in a row, and as of yesterday, it was up 0.5%. Now, some of the reasons that we're picking up is that there are signs of improvement in the demand coming in from the US and China. So that's a positive for base metals. If you have a look at the individual base metals, LME aluminium was the best performer. It gained more than 1%. On the other hand, we had zinc, copper, and tin, which also closed positive, but they had gains of less than 1% each. As far as the losers were concerned, nickel and lead actually fell, but that was only to the tune of 0.5%. If you have a look at the COMEX copper prices, that has had a good run. It's up 10 days in a row, and that's the longest streak, winning streak that it has seen since November 2016. So overall, looking very positive for base metals. Mind you, the joker in the pack could be the Baltic Dry Index, which has declined about 9% in the last 3 days. And commodities generally, or in the past, we have seen that they follow the Baltic Dry Index. So if that is an indication, we could see that this rally could come to an end. As moving on to the precious metal space, we have seen gold prices inch up to the 1265 mark. Now, interestingly, what has happened is that the gold to oil ratio has come down to the level of 2017 low. What it means that for every ounce of gold you can buy 22 barrels of oil, and that is at the lowest ratio of 2017. Also, the dollar index has been weighing on the gold prices. It has declined 3 days in a row and has corrected 0.5% in the last couple of days. Moving on to the oil prices, we have seen that the oil prices have stabilized near the 57 and the 64 mark for WTI and Brent. Now, it is expected that API will likely report an inventory drawdown of about more than 5 million barrels. So that's the positive coming in for oil prices.
Thanks, Jayesh, for that. And let's move on to the big news updates from overnight. And that's primarily about fundraising. Two large companies in India looking to raise a large amount of funds. Let's start first with Tata Steel. And that company plans to raise as much as 12,800 crore rupees in a rights issue that will help add capacity in India. In an exchange filing, the company said that the funds will be used to build and buy mills as well as to repay debt. Darshan Mehta has more information about those two companies. Darshan, the company has stated in the past that there will be increased focus on the domestic market. This is part of that strategy.
Yeah, absolutely. You're absolutely right, Alex, because problems are there as far as the European operation is concerned. The India business seems to be going fairly well. Now, the fundraising that will be happen, and they've got the board nod for the next phase of expansion of the Kalinganagar facility. This is one of the large facility that they have. So currently, it is 3 million ton per annum. They look to add in another 5 million ton per annum. So the total capacity will be 8 million tons per annum for the Kalinganagar facility. Post the entire expansion, post at Jamshedpur as well as Kalinganagar, their entire capacity will be 18 million tons per annum post the expansion. And this is only the domestic business. We're not talking about the European business now. Now, what is the project cost? It is almost 23,500 crores. That is the project cost that they have, and they expect it to complete in the next 48 months. They're looking to raise almost 23,800 crores. Now, the existing capacity utilization that the company has is at 98%. So they're looking, they're already running almost at full capacity, and that is why they are looking at fundraising. The entire fundraising that they're looking at will be a mix of debt as well as equity. So that is something that they are saying as far as the Kalinganagar facility is concerned. Basically, they want to meet requirements in the auto engineering and value-added sector. So this is something that they're looking at. Now, in terms of the other important development, it's a right issue, and that will come in at almost 12,800 crores for deleveraging the balance sheet is something that they have said. Now, how are they going to do it? Just take a look at what they have currently. The existing capacity at Jamshedpur is 10 million tons per annum. Kalinganagar is almost 3 million tons per annum. So they will add another 5. So the total will be almost 18 million tons per annum. The equity, what does this actually mean? The equity dilution is upfront, while the benefit that they will have on capex will be 4 years down the line. The other part that you have to watch out, it will be EPS dilutive, at least in the near term. So this is what free cash flows are embarked for in inorganic acquisition, and that is why they are raising funds to grow organically. Now, what are brokerages saying? Morgan Stanley is saying it is positive for the medium term. The growth that is there for Tata Steel is positive for the medium term. The other factors that they are talking about, it will help increase the share of value-added products. The other factors is that the cost is $730 per ton versus $1,300 in the first phase 1, because a lot of phase 2 expansion capacity was included in the phase 1, and they will issue almost 180 million shares in the rights issue if it is done at the current market price. So that's the Morgan Stanley view that is coming in. It will be 16% EPS dilutive, excluding the debt reduction that will come in. So that's the broad view that's coming in on Tata Steel. Expect the counter to react positively. Even IDFC has a view. They say a 20% equity dilution if the rights issue is done at a 10% discount to the current market price, and they have factored in the next phase of Kalinganagar expansion in their existing estimates. So that is something that they have. Incremental cash flows over the next 4 years would have sufficed buying out the expansion. And the balance sheet, this is the JP Morgan view. The balance sheet flexibility is critical to pursue opportunities both organically as well as inorganically, and a dilution of almost 18% on the current market price is what JP Morgan is indicating.
Thanks, Darshan, for that. That's a stock that we'll have to watch out for. But the other company that we're talking about with regard to fundraising is India's largest mortgage lender, HDFC. Last evening, it said that it will raise up to 13,000 crore rupees, most of which will be used to infuse capital into its banking arm. The company is also looking at opportunities in health insurance and in stressed real estate assets. Ridhima Saxena sums up the development in this report.
After its board meeting, India's largest mortgage lender, Housing Development and Finance Corporation, announced that it may look to raise up to 13,000 crore rupees over the next 1 year. The company said that they will do so by issue of equity shares or through compulsory convertible debentures. Of this 13,000 crore, 8,500 crore rupees will go into subscribing to the preferential issue of its subsidiary HDFC Bank. The corporation currently owns nearly 21% of HDFC Bank's paid up equity capital. So the remaining money will then go into funding capital needs of new businesses. The first first one of those priorities are either acquiring a health insurance business or organically growing a health insurance business and conjoining it with HDFC Ergo General Insurance Company. The other new business that the company indicated it may begin will be into acquisition and resolution of stressed assets in the real estate space, which may again happen through one of its subsidiaries that will look into the stressed assets resolution. The funds will also go into the growth of subsidiaries, which is Credila Financial Services Company, HDFC's Education and Development Company, and the HDFC Ergo General Insurance Company as well. The capital raise, according to the management, will also be used to fund HDFC's current mortgage operations and also to fund organic and inorganic growth in the affordable housing space. The company's Vice Chairman and Chief Executive Officer K.K. Mistry also indicated that this capital raise will be used in the longer term growth of the company and will suffice HDFC for at least coming 7 to 9 years.
And a lot more on the HDFC story in Indian Open. Watch out for that at 8:15 today. But clearly, those are the two stocks that you have to watch out for, Tata Steel and HDFC. Shraddha Babla has a list of much more stocks. Shraddha, what are the stocks on your list today? Morning.
Morning, Alex. I just want to flag off that IndusInd Bank and Bharat Financial merger have received the nod from the Competition Commission of India. That apart, we're also tracking Indian Bank, where a board approval to raise as much as 7,000 crores via the issue of shares has come in. You have an ET report which says that Edelweiss is in talks to buy Delegate's broking arm. Another ET report suggests that a promoter can bid for MBL Infra, that's the company, and that's NCLT's ruling. So I don't know how we could expect MBL Infra to react. You also have sugar stocks, which will be in focus after the Indian government withdrew stock holding and turnover limits on sugar dealers with immediate effect. That was yesterday evening. Some of the sugar stocks already saw some reaction yesterday, but we could see some marginal positive reaction continuing today as well. And on the back of bulk deals, we're tracking Ashiana Housing, where Jwalamukhi Investment Holding sold 2.6% stake in the company. Now, this Jwalamukhi investment is an investment arm of PE firm Westbridge Capital, so we might see some negative reaction on this counter. And we also have Butterfly Gandhimati, where Ashish Kacholia has bought 1.1% stake, so you could see some positive reaction there.
Thanks, Shraddha, for that. And let's move straight to the big brokerage calls of the day. Somit Sarkar has all of those. Morning, Somit.
Good morning, Alex. On the big brokerages, first we have is Macquarie and ONGC. Now they have initiated coverage on the stock with a target price of 290, which suggests a potential upside of 60%. Now this target price of Macquarie is related to their expectation of long-term Brent crude prices at around $65 per barrel. Now the current market prices of ONGC suggest a Brent crude price of just $52 per barrel. Now they're expecting production to grow after 5 years of lackluster performance. They're expecting the production to grow at around 35% by financial year 2022. On the back of higher crude prices, they're also expecting realizations and margins to gradually rise. They're saying that the company would generate good free cash flow yield of around 5% over FY 18 to 20, which would then rise to around 14% on completion of this planned capital expenditure. They are also expecting a favorable dividend yield of around 6% over FY 18 to 20. On the ONGC HPCL deal, they are saying that the overhang, there's an overhang, but if ONGC acquires HPCL even at a premium of 50%, it would be EPS accretive to ONGC. They also have a bull case target price of ONGC at around 345, where they're expecting the Brent crude to be at the range of $75 per barrel. Second, we have is Phillip Capital on Syntex Plastic. Now they have initiated coverage on the stock with a buy rating and a target price of 145, which suggests a potential upside of 85%. Now they're saying that the custom molding is expected to show a stable and sustainable growth going forward. They're saying the retail portion will now provide a good higher growth because of GST coming in. The prefab business of the company is expected to grow on the higher spending on healthcare, education and sanitation. They expected the company's revenue, EBITDA and net profit to grow at a compounded annual growth rate of 9%, 6% and 10% over FY 17 to 20. On the balance sheet side, they're saying that Syntex Plastic is expected to generate good free cash flow, which will help lower the company its net debt to equity. Lastly, the brokerage says that the company is in a strong position to capitalize on the economic recovery and growth in retail, warehousing and cold chain post GST.
Thanks, Amit, for that. Let's move on now. The new year may bring good news for India Incorporate's India Inc.'s disqualified directors. 3 months back, the Ministry of Corporate Affairs had cancelled registration of over 2 lakh companies for not filing financial returns for a period of 3 years. Consequently, 3 lakh directors on the boards of these companies also stood disqualified. But now the ministry is contemplating a window for these companies and their directors to rectify that default. Paiswani Upadhyay has all the details in this report.
The relief will be essentially in the form of this scheme, which will be called the Condonation of Delay Scheme 2018. And let me take you through the contours of it. But before that, a quick sort of caveat. This is only the draft version of the scheme that we are going to give you the details for. The ministry is likely to finalize the final version, probably towards the end of this week. This draft version was submitted in the Delhi High Court on Tuesday in the context of several writ petitions that were filed by companies and their directors seeking relief from disqualification. And here's what the scheme contemplates. The draft scheme contemplates 2 categories of companies. 1 whose names have already been struck off from the registrar of companies, and 2 those companies who are in default but their registration has not yet been cancelled. For those whose names have been struck off, will need a favourable NCLT order giving them relief plus submission of the prescribed documents. Those companies whose name has not been struck off will only need to submit the prescribed documents from the window starting January 2018 till March 2018. Now, lawyers present at the Delhi High Court also told Bloomberg Quint that this 2-category differentiation is likely to go in the final version, and there will be a one-size-fits-all sort of scheme or category that will be there in the final version, but we'll get to it once the ministry notifies it. And these are the set of documents that will have to be submitted by both categories. The annual return by a company having share capital, particulars of annual return for a company not having share capital, forms for filing balance sheet, financial statement and profit and loss account, forms for submission of compliance certificate with the registrar of companies, form for intimation for appointment of auditors. The ministry is likely to notify form ECODS, which will have to be submitted along with these documents, and a fee of 30,000 rupees.
So there's clearly lots to talk about over the course of the day, and you'll find all the live market action right here on Bloomberg Quint Live. But there are also a few stories that you should consider reading on the website, bloombergquint.com. Here they are. Bharti Airtel has deposited an interim penalty of 2.5 crore rupees with the Unique Identification Authority of India for allegedly opening payments bank accounts of its mobile subscribers without their informed consent. Now, the bulls will retain the upper hand in emerging markets in 2018, but some assets could be in for a reality check. Bonds and equities in developing countries will continue to streak ahead, outpacing their developed nation peers well into next year. That's according to a Bloomberg survey of 20 investors, traders, and strategists. I wonder what those investors will have to say about the Bitcoin, though. It crashed about 10% on Tuesday to about $17,000. Well, we're out of time on this edition of Daybreak. All you need to know is up next. This is Bloomberg Quint.